Good afternoon. Peter Klein, Chief Investment Officer, co-founder, Align Wealth, with you today on the 21st of April, 2022, to break down the conditions, the market conditions, economic conditions, how we see Wall Street and the twists and turns of the capital markets. So allow me to share my screen and we will get started. Okay, so we believe, and the setup is shown here, that inflation is indeed off the charts, and there are takeaways from inflation that we need to talk about and unpack, for they do have serious consequences to today's investment landscape. We can't ignore it. Clearly not transitory any longer. It's with us, and we'll see how long it stays. But it is it's implicit upon our work and the fiduciary standard, to which is the DNA of our work here at Align Wealth, to make sure we understand what's going on in the capital markets to better serve you and to serve your portfolios. We're going to talk about allocating capital today, how you balance this inflation with ESG, and of course, good old-fashioned water. Okay, the I word, the scary I word. You know, I think of inflation as a cancer eating away at portfolios, and we need to be sensitive to how we best work it. So here's energy inflation around the world, and you could see the hot spots and even the brown spots. Here is inflation with food. Wow. Here's inflation again with food. Clearly the message here, and of course, the most serious from my perspective is wage inflation, and we see that here. For that has implications that are stickier than other types of inflation. So that's the setup. Russia and the war, the awful, terrible war in the Ukraine, only adds to the supply shock and the supply issues that we see today. And largely because, as you could see here, Russia is a major exporter of commodities. So that's going to have another incrementally inflationary issue. And what we see, what we're concerned about, of course, is the inflation eating away at the margins. So profit margins and PE, right? So as margins come down, they've been elevated for a good long time now. As they come down, the PE is also coming down as well. And here's, you'll see when we're in inflationary environments, you'll see what asset classes do better than others. And you can see, of course, that commodities and gold and natural resources do the best. That is not to say that we only own that segment, right? While we have a base case scenario, our work is a diversified work. That's rule number one with finance, right? You don't go all in, you don't go all out, you balance. And that's the word we want to use today to understand how we play this. But clearly, in these slides you've seen, A, we've got inflation, B, it's serious and probably not going away so quickly, and then C, there are sectors like energy, like metals, that do better in higher inflationary periods. So like I said, we want to balance between the current environment with respect to inflationary forces and the risks and the implications that they have to margins and to certain sectors. And we also want to make sure we're investing in certain asset classes that, like gold, like diversified commodities, like energy, and like REITs to some extent. But that's not all, right? We want to have that balance. It's so important. So here's now when we're talking about the economy having the impact that this inflation shock could have. Think about here's a graph that looks at oil and when oil gets above a certain level, I think it's here showing at 50, or maybe it's 50, yeah. And once it goes above this line, typically we've seen recessionary periods in the past. So percentage difference between current oil price and long-term trend. And then when we see that jump up, we know that is a potential for a shock that can transition itself into a recession. So we're on watch for that, and we've heard a lot about the yield curve as well. Here's sentiment by University of Michigan, and here we're seeing how we're looking at pretty strong lows coming in here of consumer expectations. In addition, we recently saw last week the NFIB's survey, that's the National Federation of Independent Businesses, that's Main Street, Main Street small business folks, very wide survey. They were the most cautious they've been in 40 years. Not so surprising given what we're seeing every day from the war zone, but it is important because that is the lifeblood in large measure of business in the United States. So we know we need to be invested in energy, and we know we need to be invested in mining and resource companies, because those are the ones that are going to be allowing us to immunize our portfolio in large measure against the scourge that is inflation. I get that. We understand that. We also want to have a good chunk of dry powder available to balance out the portfolio. We do not want to have too much in the way of fixed income, if at all. We think that's a bit more of a bridge too far for us at these levels. However, this balancing is important. Now, once we talk about balancing, once we realize that we're investing in energy and investing in certain sectors that would be typically deemed as anti-ESG, anti-environmental, we're left with the quandary of how do we balance the two. We are sensitive to ESG, and it's an area that we've studied and focused on, and we, of course, poll our clients initially on our initial discussions with them so they understand, or we understand, what their values are with respect to some of these areas and what sectors they want to not invest in. So we get it. We're very respectful of that. However, we need to be also respectful of the fact of where the puck is going, right? And if it's going towards commodity-based and resource-based businesses, well, we want to have that, and that's obviously going to be in conflict in large measure with ESG constraints. So if an investor is somewhat open to the idea of having some non-ESG portion of their portfolio, that's certainly one way to balance it. The other way, and you'll see here, is the water sector. Guys, you don't get a more ESG, opportunistic, capital appreciation, a concept, idea, theme than you do with water. And if many of our fans know, and many of our clients know, we've been advocates of the water sector for almost 15 years now. It has been a winner. It continues to be a winner and will continue to be a winner, I believe, for a long way to come. These are companies that have great economics, great scarcity of supply, increasing demand. There's no substitutes to water. It's in every business, every part of the economy. And guess what? It's an ESG dream. So we're investing in the water sector, and in some way, shape, or form, that allows us to balance, again, that key term, balance between having some potential companies there that we may need for capital appreciation to insulate us against inflation, and to also, but not so ESG, and obviously having water, I think, counterbalances that in some way. Now, again, some folks just don't want to have any energy or mining exposure, and we get it. But for those that can be somewhat balanced, here's a way to balance. Opportunities. We've talked about this, the 4 I's and 1 V. That's what I want you guys to focus on. This is the glide path. This is the protocol. Inflation-centric, international, infrastructure, innovation, value. We have plenty of papers, white papers, and articles, as well as videos on our website at alignwealth.com that you could view about these themes. Here's global infrastructure. You could see the steady eddiness of this, right? Capital appreciation and income. These are long-term contracts with inflation riders. Inflation riders. They're immunized. That's a good thing. We want that, right? We want that kind of cash flow protection. And then here's value. We think value is complete. That's the V in the four eyes in V, and we think it's very cheap in this level. And it speaks well to an inflationary period because a lot of the companies that find themselves in the value complex are the types of companies you want to own in an increasing interest rate environment. Think financials as well as energy. And here's another example of the jaws that close. You remember the alligator jaws, right? You never want to be, sort of on the top side of that because it's going to come down. You're going to see negative returns. You want to be on the bottom end as it goes higher, just like it did here. So I think this is something we should be very mindful of. We have reduced our growth exposure considerably and have increased our value exposure considerably. Again, within the balance of having dry powder as well as having, a diversified portfolio. That's the way we do it. Because again, bonds are not doing it for us anymore. Here's gold breaking out, maybe a little bit more. Looks good in here. We like it. Thank you. Thank you for your attention. Thank you for your continued vote of confidence. We really appreciate it. At Align Wealth, we're here to serve. We're here to help you develop your comprehensive wealth management plan. Estate planning is another area. Perhaps you'd like to take a stress test of your portfolio. Many of us have portfolios that are away from our, our work together. And, if you do have some portfolios away from us, by all means, we're happy to do a stress test of those portfolios to make sure that you're in alignment with your risk tolerances. So thank you very much for your attention today. Looking forward to talking with you again soon.